You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 5th day of August, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. So that one's reserved for our traders and those who are taking the 1-week free trial. If you have not yet taken the 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. And when you take the trial, you're not just getting access to the live training room. We treat you just like you were a full-fledged member for 5 consecutive trading days. It doesn't matter what day of the week or hour of the day you sign up for the trial. First, on the day you sign up, we'll get your indicators indicating the trial will officially start the following day. Weekends don't count against you, so you'll get 5 consecutive trading days. There's no credit card required because we want you focused on what's being taught so that at the end of the trial, you can make a well-informed, intelligent decision whether or not trading is right for you. Now, when the live training room ends at 11:30 a.m. Eastern each day, we take a 30-minute break, come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link. Fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, can't join live, but want to get caught up later. Well, you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. It's the Christian Financial Radio Network since 2005. But you don't have to remember all that, just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. Now, if you're new to our neck of the woods, it's a great way to get to know who we really are. thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it is a great resource to have at your fingertips, and it lets you see that we've been around a minute. This is our schedule for each afternoon broadcast, so we're going to dive in with our daily devotional. Michael will join us at the top of the hour for a recap of what happened in the live training room this morning, and then a little live trading on the TradingView platform. So here we go. Now, the topic of our devotion that we started yesterday, chasing carrots, the endless pursuit of more. Our scripture today is Luke 4, verses 1 through 20, from the NIV translation. Jesus, full of the Holy Spirit, left the Jordan and was led by the Spirit into the wilderness, where for 40 days he was tempted by the devil. He ate nothing during those days, and at the end of them he was hungry. The devil said to him, "If you are the Son of God, tell this stone to become bread." Jesus answered, "It is written, man shall not live on bread alone." The devil led him up to a high place and showed him in an instant all the kingdoms of the world. And he said to him, "I will give you all their authority and splendor. It has been given to me, and I can give it to anyone I want to. If you worship me, it will all be yours." Jesus again answered, saying, "It is written, worship the Lord your God and serve him only." The devil then led him to Jerusalem and had him stand on the highest point of the temple. "If you are the Son of God," he said, "throw yourself down from here. For it is written, he will command his angels concerning you to guard you carefully. They will lift you up in their hands so that you will not strike your foot against a stone." Again Jesus answered, "It is said, do not put the Lord your God to the test." When the devil had finished all this tempting, he left him until an opportune time. Jesus returned to Galilee in the power of the Spirit, and news about him spread through the whole countryside. He was teaching in their synagogues, and everyone praised him. He went to Nazareth, where he had been brought up, and on the Sabbath day he went into the synagogue, as was his custom. He stood up to read, and the scroll of the prophet Isaiah was handed to him. Unrolling it, he found the place where it is written, "The Spirit of the Lord is on me, because he has anointed me to proclaim good news to the poor. He has sent me to proclaim freedom for the prisoners and recovery of sight for the blind, to set the oppressed free, to proclaim the year of the Lord's favor." Then he rolled up the scroll, gave it back to the attendant, and sat down. The eyes of everyone in the synagogue were fastened on him. Again, that was Luke 4, verses 1 through 20. So we're in day 2 of chasing carrots, the endless pursuit of more. Today we'll talk about chasing fame. Who doesn't want to be famous? Well, I guess introverts, but most people do, whether they talk about it or not. The Greek word for fame, it's spelled Pheme, pronounced fema, is used only twice in the New Testament. It's defined as speech, report, or news. Here's how fema is used in Luke 4:14. And Jesus returned in the power of the Spirit into Galilee, and there went out a fame of him through all the region round about. Where was Jesus returning from that caused a fame of him to spread throughout the region? Let's get the context here. In Luke 1, we hear about Jesus' coming birth. In Luke 2, he's born and grows into a boy. In Luke 3, he's baptized. Finally, in the several verses of Luke 4, Jesus is fasting and being tested in the desert by Satan. This brings us back to Luke 4:14. Then Jesus returned to Galilee, filled with the Holy Spirit. Reports about him spread quickly through the whole region. So in today's devotional, you'll take in the whole story of Jesus' test in the desert. Jesus was fasting in the desert for 40 days, and in the middle of it, Satan himself tempted Jesus with the wrong kind of food, fame, and faith. Each time, Jesus rejected the temptation and responded with God's word. Luke 4:14 fame is not always the kind we chase, is it? We tend to go after the kind Satan offers. Jesus in the desert. Supply without satisfaction. Splendor without sacrifice. And salvation without surrender. Think about recognition at work, social media likes, and any kind of praise from other people. It feels good for a moment, and then you instantly crave more. If we're honest, we've all likely experienced times when we wanted to be noticed or well known for something. Similarly, Satan offers Jesus money, influence, and power. Jesus was tempted, just like us, but he didn't take the bait. We also read about Satan's final temptation to Jesus, asking him to jump off a building so God would have to catch him. Have you ever tried to pray a prayer that forces God to do things your way, in your timing? It's not very honoring to God, which is why Jesus responds by saying we shouldn't test God. There's a reconstructed language called PIE, P-I-E, Proto-Indo-European, the unwritten ancestor to Greek. The PIE root word that became fema is ba, which means to shine and to speak. So let's go back to our roots. We're not made to be the light, that's Jesus, but we are called to shine his light. We are not the Word. The Gospel of John says that's also Jesus. But we are called to speak his word to all the world. Chasing fame is going after something that belongs to God instead of going after God himself. That's the oldest temptation in the book. Don't fall for it. Next time you face the temptation of fame, do what Jesus did. Shine God's light by speaking his words. And when you do, Luke 4:14 happens. His fame gets spread around. Let's pray. Heavenly Father, thank you for showing us how to stand strong against temptation and for declaring freedom, healing, and hope to the broken. Fill us with your Spirit as you are filled, and use us to bring your light to the world. May we walk in the power of your word and boldly live out the purpose you've placed on our lives. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Tuesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Well, I don't know if this is your idea of a turnaround Tuesday, but a little bit. Currently, the Dow's down 44 points. NASDAQ is down 82. S&P 500 down 21. And the Russell 2000 is down half a point. They're all the same color for now. So we're not very deep into the red, but it is certainly a red day compared to yesterday. In the commodity basket, crude oil is down 69 cents, trading 65.60 last. That's a little over 1%. Gold up $17.90, trading 44.30 last. Silver up 52 cents, trading 37.85 last. That's a gain of almost 1.5%, or $2,500 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 258 points. Shanghai rose 34. The Hang Seng gained 169. And in the European markets at the close, FTSE up 14. The DAX up 88. CAC down 10. So we had a green day in Asia. It was a mixed day for the UK. And at the moment, it is a red Radio Tuesday here in the US of A. And it's been a quiet, flat, sideways, waiting on something to happen kind of a day. At least it was overnight. We've had some movement this morning. Turning to the news, some congressmen have gone AWOL. The Texas House yesterday issued civil arrest warrants to force the return of Democratic lawmakers who left the state and blocked a vote on a Republican-led redistricting plan, as if their party had never done this before. They're quite famous for it. Texas Governor Greg Abbott said the absent lawmakers had forfeited their seats and warned he would begin efforts to remove them from office if they don't return. The warrants can only be enforced within Texas. So, to everyone who voted for these lawmakers, here's how they behave when they're faced with trouble. They run. They hide. Most of the 62-member House Democrats left Texas Sunday to block a quorum and stall voting on a map that would create 5 additional Republican congressional districts ahead of the 2026 elections. Texas Constitution requires 2/3 of the 150-member Texas House to be present to advance legislation. Democratic lawmakers who travel to states like Illinois and New York argue the redrawn map dilutes the voting power of minority communities and displays characteristics of partisan gerrymandering. Well, when they did it, what characteristics did it have when they did it? They can do it, but the Republicans can't do it. I thought no one was above the law. That's what they said. Republicans currently hold 25 of Texas' 38 U.S. House seats. And if you're not familiar with gerrymandering, Google it. You know how to spell it? GERRYMANDERING. Now, I don't know what's going to pop up first in the search results, but always consider the source, okay? Which means you're going to have to look at a couple of different sites and definitions of gerrymandering to really understand what it is without any kind of political slant, Democrat or Republican. You want to actually know what the process is. A military trial began yesterday over the March 2024 Moscow concert hall shooting that killed 149 people and wounded over 600 others. The attack, claimed by a regional ISIS affiliate, was the deadliest massacre in Russia's capital in 20 years. 19 people are on trial over the attack at Crocus City Hall concert venue, where attendees waited to see the popular rock band Picnic. After gunning down concertgoers, 4 assailants set the venue ablaze. Authorities identified the suspects as citizens of Tajikistan, where an ISIS affiliate has recruited thousands of people. The U.S. said it warned Russia of intelligence suggesting an imminent attack, but Moscow dismissed the warning. It was really just too busy. It had its hands full with the war with Ukraine. Roughly 30 survivors were present at yesterday's hearing, which is not open to the public. Defendants include the 4 alleged gunmen and 15 accomplices held in Russia's defendant cages. Don't know if you've ever seen those, but Google that too, Russia's defendant cages. Human rights groups have criticized the treatment of the suspects over signs of torture. These people killed 149 people and wounded over 600 others. And human rights groups are concerned that they're not being treated well. A dizzying array of trade crosscurrents continued today, with a push for last-minute deals, lingering fuzziness on previously announced trade commitments, and indications that a deal to delay tariffs on China is close. It all comes as global importers brace for a first deadline coming Thursday morning, when President Trump promises to implement a central plank of his trade agenda in the form of a tiered approach to reciprocal tariffs from 10 to 50%. The President has repeatedly said he's full speed ahead on his plans and that no delays are likely, even teasing on CNBC this morning that he probably won't run for president again, but that he'd like to, in part because, in his view, people love the tariffs. Of course, we know that the Constitution says he can't run for a third term, but the idea has been floated quite a bit. Some countries clearly aren't big fans at the moment and find themselves on the outside looking in, particularly Switzerland and India. They had all the time in the world to make a deal or try to make a deal. Those two nations face notably divergent situations right now, with the Swiss president announcing she is flying to Washington, D.C. today to try to find last-minute concessions to avert a 39% tariff on goods from her nation. India, meanwhile, has seen its chances of a deal dwindle, with top aides for Indian Prime Minister Modi also reportedly traveling this week, but they're going in a different direction. They're going to Moscow. Trump downplayed the chances of major concessions with Switzerland during his call this morning with CNBC and added regarding India, we settled on 25% tariffs, but I think I'm going to raise that very substantially over the next 24 hours. Trump also weighed in on talks with China. Markets are closely watching for any signs of an agreement to delay a tariff snapback scheduled for August 12th, with Trump saying we're getting very close to a deal. Trump also said this morning that the pool of potential nominees to succeed Federal Reserve Chair Jerome Powell is down to 4 people, and that Treasury Secretary Scott Bessent will not be nominated for the role. The 2 Kevins are doing well, and I have 2 other people that are doing well, Trump said in his interview this morning. The 2 Kevins are in reference to former Fed Governor Kevin Warsh and Kevin Hassett, Director of the National Economic Council. When asked about Fed Governor Chris Waller and Secretary Bessent, Trump didn't deny that Waller was among the 4 possible, but he did say that Bessent does not want the job. Trump said, I love Scott, but he says he wants to stay where he is. It's going to be real interesting to see. Oh, and additionally, Fed Governor Adriana Kugler is set to leave her post at the end of the week, and that a nominee for that opening could be announced in the coming days. When asked whether a Kugler replacement could eventually be nominated to replace Powell as Fed chair, Trump said, yeah, that's certainly a possibility. Kugler's term as a governor was set to expire on January 31st, but she announced last week that she'll be resigning on August 8th, opening a spot on the Federal Reserve Board for the president to fill. Kugler, who has served as a Fed governor since September 13th of 2023, will return to Georgetown University as a professor this fall. Can't believe she's not going to work at Goldman Sachs. Maybe she'll be a professor for a year and then make the leap, so it's not quite so obvious. From Reuters, the U.S. trade deficit narrowed in June on a sharp drop in consumer goods imports, and the trade gap with China shrank to its lowest in more than 21 years. The latest evidence of the imprint on global commerce President Donald Trump is making with sweeping tariffs on imported goods. It's working out just like he hoped. Elon Musk and Tesla were sued by shareholders who accused them of securities fraud for concealing the significant risk that the company's self-driving vehicles, including the robotaxi, were dangerous. Come on. How can you look at one of these driverless cars going down the road and not realize that they're dangerous? The proposed class action was filed on Monday night in Austin, Texas federal court after Tesla's first public test of its robotaxis in late June showed them speeding, exhibiting sudden braking, driving over a curb, entering the wrong lane, and dropping passengers off in the middle of multi-lane roads. Tesla's share price fell 6.1% over 2 trading days after the test began. Shareholders accused the electric vehicle maker of overstating the effectiveness of his autonomous driving technology, inflating its business prospects and stock price. The lawsuit seeks unspecified damages for shareholders of record between April 19th of 2023 and June 22nd of 2025. And on the day, Tesla's trading $307, down about $1.50 a share, half of 1%. Guess they're not too worried about it. And last, from Bloomberg, oil fell for the 4th straight session on signs that producers are bracing for an increase in crude supplies later this year. And investors discounted U.S. President Donald Trump's threat to penalize India for buying Russian oil. That doesn't even make sense. But hey, that's Wall Street. No, seriously. All right, let's look at Logic 247. Here it is. What do we got? Okay, Logic 247 is our 24/7 around-the-clock E-mini alert service. It's not just the E-minis, it's also crude, gold, and silver. We're in week 366. Over the last 366 weeks, we've issued over 20,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued 27 alerts. At the time Valerie did the recap, 7:30 a.m. Eastern, we were still waiting on the outcome of 18. That gave us, and I think some of those have probably filled with the down move we had. So that was 9 actionable alerts, of which so far nothing has stopped out this week. But today's only Tuesday. Every logic alert has an entry price and initial target. And you'll see when we go to the charts, I mean, the markets are just so flat overnight. By the time she did the recap, the markets had not made their move. So she'll update it this afternoon, as she does each and every day. Every logic alert has an entry price, an initial target, usually additional targets, and a final trade to target. Logic alerts are designed to help you learn how to read a chart. Hopefully you use them for the purpose intended. You can trade them as well, but make sure you use them for the purpose intended. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Last week, we ended up with 2 stop outs or 4%. And I think we had a total of somewhere between 60 and 70 alerts last week. Now, 366 weeks is a very long time. But years before Logic 247, we had our original alert service, the concierge trade alerts. And they're quite different. Number one, they don't come out around the clock. They're typically posted 5 minutes ahead of the Globex Open each evening. Last night I got them out 9 minutes ahead of the Open. So what that means is all of our traders and trial members had all these targets 9 minutes before the Tuesday session began. And the Tuesday session that we're in right now began last night at 6 p.m. Eastern. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. We'll go through each one of those charts individually and see what happened. And when you see those targets drawn on, just keep in mind, all members and trial members had the targets 9 minutes before the market opened. Okay, the daily chart of the S&P. So last Thursday and Friday, we had 2 red days. Brought us down to the area where we expected to find potential support. I'm going to get rid of that little guy right now. It served its purpose. June 16th, it was that low that we were looking at for potential support. We actually spiked it a little bit. What was the low? July 16th low, 62.41. 62.39.5. So we spiked it by a couple points. Then yesterday was a gangbuster day. Sent us all the way back up through the BBC, through the 62% Fib retracement, and we ground to a halt at the black step line. Yesterday, on the broadcast, we talked about this as being resistance times 3. When price moves up to the BBC, pullback holds more often than not. The 62 alone, potential resistance, and the black step line. So when you got them all three kind of garbled together there, that's what it looks like. We got red and falling overhead. This is the all-time historic high right here, 64.68.5. So, do we close today above or below the green line? That's the BBC, stands for bull bear cross. When price crosses below the green line, like it did February 21st, we're bearish and expect lower prices. When price crosses above the BBC, we're bullish and expect higher prices. Now, price always reverts to the mean. And for us, the mean is green. We call it the BBC. Bull, bear, cross. Okay. You'll notice that the pullback to the BBC holds more often than it doesn't. But eventually it will trade through. Once we got on the north side of the BBC, the pullback held, the pullback held, the pullback held. And we kept talking for a couple weeks about we were overdue for a pullback, and we finally got it. And we landed really at about the 50% Fib extension. Took out that low by just a couple ticks. Point and a half maybe. So now this is a very interesting situation. We're sitting right on top of the BBC. A leg and a retracement. So we're going to get another leg. This is the shallowest possible Fib retracement. The 24. 60.93. A healthier retracement would be down here at 58.61, and a really healthy retracement would be down here at 56.73. That would give us lots of room to run into the end of the year and have a real Santa Claus rally. We'll see what happens. Red and falling overhead. That's ominous, but price can trade through it. And the market reverses itself today and we get above red and falling, then we're looking at the all-time historic high as the next obstacle. If we take out the all-time historic high, well, then we're looking at the 100% fib extension. Now, the daily chart's important, not because you trade it, but because institutional traders look at daily, weekly, and monthly charts the way we look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So I encourage you, whether you trade futures, stocks, crypto, Forex, ETFs, spend 2 minutes each morning with the daily chart of whatever you're about to trade and see what the deep pockets are doing or not doing. You're also able to identify major areas of potential resistance. Right here where blue turned to red, that's one. All-time historic high. See, on your smaller range chart, you can't see this. And where do we expect support? Well, obviously at the 50, at the low of Friday. And then we'll probably get some support here. And then before you know it, we're at the 24% fib retracement. That's if the market continues to drop. But any positive news on the tariffs will probably send us up at least to red and falling, perhaps beyond. Stay tuned. We'll keep you posted. Okay, the logic alerts and the concierge trade alerts are created on the 30-minute chart. The vertical line separates today, Tuesday. Here's Monday. Back over here is Friday. Now, these are this week's weekly trading zones, the horizontal lines. We've published the zones for the last 15 and a half years, every Monday. They come out Monday morning, 6:15 a.m. Eastern. That gives all of our traders plenty of time to get them on their charts before Wall Street even wakes up for the week. Once the zones are posted, they're carved in stone. They don't change in any way whatsoever. When price drops to a weekly zone, we expect support till proven otherwise. And when price rallies up to a zone, we expect resistance till proven otherwise. One of three things happens when price encounters a weekly zone. 70% of the time, it's going to be consolidation, like this. 20% of the time, rejection. 10% of the time, the slice. Now, as we came down this morning, you see how flat we were overnight? That's why we had so many logic alerts still waiting. So we had this move down to the zone, consolidated just a little bit, made another drop. Buyers came in here ahead of where I would have expected. I would have expected them to come in right here, basically at the short target. Buyers came in early, and now we found resistance at the weekly trading zone. And we're printing a red candle. So 63.13 down to 63. Let's do this. 63.13 to 63.08. That's 5 points. That's a really nice window of opportunity. The Dow. Here's where we opened last night. Pull back to the VVC, consolidate, see how flat we were all night. Kind of unusual, but it is what it is. We consolidated at the BBC, and we finally made that drop just like on the ES. We spiked the zone, then came back to close at the zone. Then another leg down, and again, I would have looked for support here. Buyers came in early, drove us up through the weekly zone to the BBC. And so far, the pullback is held. Now, the step line in red and falling are starting to get directly below price. So those become potential support. So as price comes back down, this area right here is basically support times 3. Hang on a second. Okay, back to where I was. So again, when red and falling and the step line get directly below price, that's potential support. The zone itself is potential support. Now, it doesn't mean price can't rip right through it, but you should expect at least a bounce there. On the Russell, here's where we opened. Price pulled back to the BBC. We made a run at the long target, but markets were just so lackluster. What was the high here? 22.36, so we missed it by, what, 2 points? Yep. Then we came down to the zone. We got below the BBC. See, the pullback held, and it held until it didn't hold. Let's open these up so we can see. Yeah, that's a little better. Okay, same situation. Red and falling's directly below price. So is the step line. And then you got the zone as potential support. I don't know if we're going to see the markets go substantially lower today. Buyers came in here. Now this little area right here, you see where the step line crossed blue and climbing? That would be a good area for potential support, but we spiked through it. That was on the 1030 candle. And it bounced us all the way back up to the BBC, and so far the pullback's held. We'll see if we continue lower or not. Haven't hit the long target, haven't hit the short target. It's kind of flat and sideways. On the NQ, this was the open last night. Pull back to the BBC held. And then we got a little bounce. And basically we've got like a triple top across here. Here, here, here. And then off the 10 a.m. news, we got below the BBC, dropped to the zone, consolidated a little bit, attempted the short target. Price came in right there, where the step line went back to the left side of blue and climbing. That's an important price, important area, so reasonable support would come in there, or buyers would come in. Pushed us up to the zone, which has served as resistance, and red and falling. That's potential resistance because it's directly above price. So from here, 23,130 to 23,120, that would be $200 per contract traded. Crude oil. This was the open last night below the BBC. Pullback held, and it held, and it held. And now we're just kind of doing some wide consolidation here at the zone. We hit the short target. And we're poised to go lower. Substantially lower. The lowest zone for the week is down at 61.80. And if things keep going the way they've been going the last few days, I mean, look at that. This bearish cross way back on July 30th has brought us all the way down to here. We're slightly off the low of the session. That's a big red candle. When the price of crude moves $1, that's worth $1,000 per contract traded. So what did we open at last night? 66.20, and we've dropped to 65.20 and beyond. So that's $1,000 per contract move right there. Gold. Here's where we opened. Just kind of trudging sideways. We get below the VVC. Get a lag and a retracement, pull back holds, a lag and a retracement, the pull back holds. And then we go through the short target and the low right here. Just below that low right there. Right there. That's pretty much it. Yeah. So support will always send the market looking for resistance, which it found at the weekly trading zone. And as you can see on this move up for gold, you had price, the black step line, and blue and climbing. As we consolidate here at the zone, the step line is in the process of crossing blue and climbing. What does that mean? Well, when the step line gets on the right side of blue and climbing, we look for a retracement back to the BBC. Now, if price spikes the BBC or trades through, keep in mind you got a bullish cross right here. That's potential support. So gold is the only market where we've seen both the short target and the long target today. Silver. Open, flat. We dropped to the zone in the VVC. Support, but sent us up to resistance, which was based off yesterday's high. That's the long target. Sent us back to the weekly trading zone. Back to the long target, back to the zone, back to the long target, back to the zone. Look how many times the zone held. And then we finally get a leg that takes us through the long target. We get a retracement back to the BBC, and it holds and takes us up to the high of the session, 37.94. A $1 move in the price of silver is worth $5,000 per contract traded. Now the high of the session was 37.94. So basically from this zone yesterday up to the high of today, that's a $5,000 per contract move. And here we sit with the daily chart sitting right on top of the BBC. You see that little wick, we've spiked it, and then we popped right back up. Pretty quiet, pretty sideways. I mean, look at today's candle compared. Now, yesterday's volume was a little over 1.2 million. Friday, first day of the new month, 2.2 million. And today we haven't broke 1 million yet. Again, yesterday was only 1.2. To become a member, send an email to support@cfrn.net. In the email, let Valerie know you want to become a member. She'll send you an email that explains what it means to become a member. And she'll include a link that you can click to make your payment and become a passport holder. You get 2 hours of live training every trading day, along with 2 hours of live interactive group training. It's real trades and real markets, real money. You also have access to private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published each evening. Typically, it's 5 minutes before the open. I was a little early last night, 9 minutes before the open. Monday mornings at 6:15 a.m. Eastern, you'll always get the weekly trading zones. And again, once they're published Monday morning, they're carved in stone the entire week. They don't change in any way whatsoever. Thursday afternoons, you get an invitation to attend the members only workshop Thursday night at 8 p.m. Eastern. And you get the golden key that opens all the private channels in Telegram. We have private channels, we have public channels. The public channels are for those who are taking the trial so that they can get the alerts, so that they can get the weekly trading zones, and so they can ask questions and talk with our traders. You don't have to believe us. Ask the people who trade with us every day, using our methodology, our strategy, our indicators. Who really are our family. Community of believers who trade for a living.
Community of believers.
Everything a trader needs, all under one roof, one low price. Just send that email, support@cfrn.net. Let me in. All right, Michael's going to give us a recap of what happened in the live training room this morning. Then do a little live trading on the TradingView platform.
And yes, here we go. All right.
Okay, looks good.
All right, excellent. Here we go. All right. Well, good afternoon, everyone. Today is the 5th day of August, 2025. What did I? Let me just look at something really quick right here. I did do that. Okay, today is the 5th day of August, 2025. If you have not taken a free trial with us, go ahead to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Just click on that purple button. It will bring you to this page right here, where all that we ask for is your name, your email, and your phone number. Down at the bottom, gives your first name, your last name, your email, phone number right there. All right, down at the bottom, gives you TradingView login ID. Now that is to get the indicators indicating on your platform. If you don't have a TradingView login ID, click on this little button right here. That will bring you to this page. Follow the instructions on this to get a TradingView login ID. That's all that you need to do. All right. Once you do that, supply it to us right down here at the bottom. Gives you TradingView login ID. All right, and we'll get your indicators indicating on your platform. Okay. Okay. Now, today we had a pretty good day. I mean, we're still well below the daily average on the year. We're like at a third of the daily average on the year, but we're still, you know, it was good. It was 10 times better than yesterday. It's about a third better than what Friday was, but it's progress. All right, we had a little bit better results today. Markets were a little more forgiving, or giving, I should say, not forgiving, just giving altogether. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today it took 5 minutes and 3 trades to get to $1,500 with 10 contracts on, or $150 with one. Yesterday it took 1 minute and 1 trade to get to $120 with one contract. The day before that it took 2 minutes and 2 trades to get to $275 with one contract on. Okay, so get in there, get your goal for the day. That's the idea. On the month now, we're at $2,077. So in the 3 days, we're at $2,077, averaging $692.50. Again, that is with one contract. And if you could take home $692.50 on average every single day, let's just do the math on it. 692.5 times 5 equals that times 52. $180,050 is not bad money for working less than an hour a day. You could consistently do that, and I do consistently do that. Under a half an hour consistently. Then that's all you really need. You can just add more contracts if you want to make more money. Anyway, we're averaging $692.50 per contract. On the year now, we're at $175,172, again with one contract. Now, on the year, we have 133 days that we've traded. So that's 133 times 2 equals 266 hours that we've traded. And we're at 175,172 divided by 266 hours. So that's just about what we're averaging right now. The 692 on the year, we're averaging $658 per hour for the morning session with one contract. Right? $658 per hour. If you were to do that times a 40-hour work week, that's pretty good money right there. That's $26,000 a week. That's over $1 million a year. $1.3 million a year. Again, pretty good money. And you can get it. It's right here every single day. But in the morning session, we're actually averaging better than that. Well, $1,317 per morning session. So let's do the math on that. What do we come up with? 658. And if we do 1317 divided by 2, 658 and a half. Hey, I guess I could have done it that way too, couldn't I? That's what we're averaging for the morning session. If you were to quit trading when you get the goal for the day and add one contract per month, well, then the number goes way up because you quit trading when you get the goal for the day. So that means you're only working so far this year 17.35 hours instead of 266 hours. 17.35 hours, and you'd be averaging $5,162 per hour. That's almost 10 times as much. It's like 8.5 times as much by quitting when you get the goal for the day on an hourly rate anyway. And that's adding one contract a month. Now, if you were to start it with like say 8 contracts, which you should be at right now, if you were to start with 8 contracts and trade all the way through, that number would be huge. Be a much bigger number. I don't feel like going through the math for that right now, but it would be a much bigger number, suffice it to say. Okay. Just thinking out loud, doing the math in my head. Now, the gold is what we ended getting the most on. The gold and the NQ. So let's do the middle two. All right. Start out with the Russell. And on the Russell, we started out way over here. I think it was our first trade of the day on the Russell. Why do I not have? Oh, there it is right there. It was our first trade of the day on the Russell. We stopped out on that one. And that one did, it was actually that bar right there. Okay. And that one did actually go down and do what we expected it to do, but it stopped us out to the tick right there first, and then ran down and did what it should have done. Okay. And then this one didn't get into the overbought. This one didn't hit the midpoint. This one didn't hit the midpoint. This one did come off the midpoint. That was actually a long trade right there that I didn't get. I'm not going to go through every single one. That'll take a little while. But we didn't trade again until over here. We had a break even. Then we picked up just little bits on the Russell. We had a +3 right there to get us to -12, then a +1 to get us to -11, then a break even, then a +2 to get us to -9, and I forgot to do this one, whatever that was at the end. It's like 3 of them that I forgot to do yesterday, and there's 1 today. Let me go see if I can find that Russell trade. I probably can't. I can't. It's not worth finding. But then we had that right there, whatever that was. Then comes the break. Now during the break, there was a short trade right there. There was a long trade right there. This would have been a short trade right there that would have stopped out. A long trade, nope. A long trade right here would have worked out just fine. A long trade right there, that would have worked out. And you get into the red. You back in the green. This, nope. That was it. Those are all the trades that we had on the Russell. Okay, so we ended up with -9. We actually ended up a little better than -9. I don't know what it was, but it was better than -9. The ES now, we ended up with -2 on the ES. I'm pretty sure I got all the ones on the ES. Now, we would have been positive on the ES, but I messed up one time. I'll show that to you in a second. Started out way over here on the ES. We had a break even on that one. Then running through here, we should have traded that. That would have stopped us out. We should have traded. Nope, that wasn't it. That wasn't it either. No, that wasn't it. We should have traded that. That would have been a nice profitable trade. That would have been a stop out. That would have been a stop out. That would have been a nice profitable trade. We did trade that. Now on the ES, we went from +4 to +5. So I guess this was our +4, right? Yeah, that was our +4. We got 4 ticks on that one. We had a +1 in here somewhere. We got to +5. And then this one here, I should have had my stop at break even on that, but I tried to do a screenshot and do something to show people. I was in the middle of, I was trying to show people something, and I ended up not moving my stop to break even when I should have, and it stopped me out -10 ticks. Then we picked up 1 tick here to get us to -4, 2 ticks there to get us to -2. Then we had a break even, and that was where we ended it on the ES for the morning session. Now, the other trades that triggered in here during the morning session would have been right here. Was one. Right here was one. So that would have worked out. Both of those would have worked out. This was one. That would have worked out. This was one. That would have worked out. This was one right here. That would have been really close. It depends where your fill was. But with a 10 tick stop, if you got filled here at 38, your stop should have been down at 35.5. Right? Below that bar was 36. So should have worked out if you had a pretty good fill, reasonably good fill. And the next one would have been, there would have been no other one. That's it. Okay. And that was the ES. All right. So let's cover the NQ right now. An up close on the current bar on the NQ would be a long trade. An up close on that bar would have been a long trade a second ago, but now I don't think it will be. 73 up to, nope, it won't be. Let's go back to the beginning on the NQ. Okay, all the way back to the beginning. Way back here to the beginning of time. And the NQ. Here we are. Our first trade on the NQ, we picked up 45 ticks on the very first trade. That, I think that's where we got our goal for the day. We got that one right there, got our goal for the day, because we were -15 on the Russell at that time. We had one break-even ES trade, and we were -15 on the Russell, and picked up 45 ticks there. That put us at plus 25 ticks overall, I think. Plus 30 ticks overall, sorry, plus 36 overall, which is under $50 a contract. Then our next trade was right over here. The next trade that I took, let me see if there's anything that I probably should have taken in there. This one right here. That gapped up. That's right, too. That gapped up really fast. You had to be ready for that because it gapped up to the point where you would have moved your stop to break even if you had an order waiting there, and then it came right back down. But I didn't get that anyway. The next one would have been right in here. That was an okay trade to take. And the next one that I did take was right here, and that gave us 12 ticks right to 57. Then from 57, this was, I was doing training all through here. I wish I would have recorded it, but I was talking all through there. But all the way over here, went from 57 to 81, and then 81 to 89, and then we stopped out. 89 was the high for the day for us on the NQ. Then we stopped out down to 64. Then we had a break even. And all the way over here, we went from 64 to 80. And then we went and break even in 84 to 80. To 88. Then we stopped out again, brought us down to 63. Then we went to 67. Then we went to 79, and we had a break even. And that's where we ended it. It wasn't as many trades as one day last week. We had like 26 trades on the NQ alone. But if we go through here now, what I'm looking at, okay, go through here and find the flat spots. And if it's green, see where it crossed above it when it's green like that, right? And then look down here and see if it came out of the oversold. If it did on that bar, that's the trade. That was one right there. That was one right there. This one would have stopped out. This one would have been profitable. And if it's red and you have a flat spot where it came out of the overbought, then that would have been a trade. That would have been a break even. That probably would have been a break even. You have to see 66 and a quarter, and it dropped down to 63 and a quarter. Yeah, that gave 12 ticks. That would have been a break even. Then in here, you're looking for when it comes through the flat spot. Does it come out of the overbought at the same time? Okay, for the shorts, like this one right here, through the flat spot, came out of the overbought. That's a trade. Now we're looking at the longs through the flat spot. Did it come out of the oversold? That did right there. That would have been a trade, and that would have stopped out. Okay. Through the flat spot right there. Did it come out of the oversold? It did. That would have been a trade. Through the flat spot, did it come out of the overbought? It did right there. That would have been a trade. But it ended up being a break even. Through the flat spot, did it come out of the oversold? It did. That would have stopped out. Through the flat spot, did it come out of the oversold? It did. That would have been break even. Same thing right there. Actually, this one wouldn't have been a trade because it didn't make it into the overbought for this last one, so that wouldn't have been a trade. Then through the flat spot, did it come out of the oversold? It did. Right there. That would have stopped down pretty much to the tick. This would have gotten it back. Through the flat spot on the downside. This one didn't go all the way to the oversold, so you wouldn't add anything there. This one here would have been a trade. That would have stopped you. This could have gotten it back. Through the flat spot. It's going to come out of the overbought. This right here would have been okay. Probably would have been a break even. Through the flat spot going long. And that's it. That was it on the NQ. All right, so I saved gold for last. We ended up on the NQ, we ended up with plus 79. Okay, and I saved gold for last because the gold is a pretty easy one to do here. You had most of the trades all in one patch. Yeah. You were all in one patch right here. Like the first one was plus 5, the next one was plus 3 to get us to 8. The one after that was plus 8 to get us to 16. The one after that was 5 to get us to 21, and the one after that was 5 more to get us to 26. And that was it on the gold. Right? There really wasn't much you could do over here at the beginning of it. Go back to the beginning. I don't think we missed anything in here right at the very beginning. See where it came out of the oversold right here was nowhere near the midpoint. So then none of these mattered. So I got all the way up into the overbought, and then the next one that would have mattered would have been right here. So that was a trade there. That would have been a break even. Then it flipped sides. That was above the midpoint, so no trade in there. I'm looking for it to go through the flat spot when it comes out of the oversold if it's green, and when it comes out of the overbought if it's red. Right here would have been a trade. That would have been okay. See, it went through the flat spot right there, but it didn't come out of the overbought. And you know, these trades, and coming through the flat spot right there, that would have been a trade. It might have been a break even, it might have been a stop out, depends where you got filled. That right there, that was above the midpoint. If you took it, it would have been enough to get the break even, maybe take a little profit, but I probably wouldn't have done that because it was above the midpoint, just a hair above it. Nothing through there, nothing through there, nothing through there, nothing. And this right here would have been a trade a few minutes ago. For YouTube videos, well, the YouTube video that's being created right now is youtube.com/CFRN. youtube.com/CFRN. Okay, that's what's being created right now.
Same one it's been, Joan, forever.
And all right, so that was it, guys. So we'll go back to this really quick. We ended up with plus 79 on the NQ, minus 9 on the Russell, plus 26 on the gold, and minus 2 on the ES, 585 on the morning session. 5 minutes, 3 trades to get to $1,500, and a total of 29 trades this morning. Okay. In August, we're up $2,077 so far on the 3 days, averaging $692 per day. On the year, we're up $175,172, averaging $1,317 per day. Okay. Okay. We need an up close here on the ES right now. That'd be a long trade. 34 up to 36 on that. 34 up to 36. There's the up close. And there it is. Build 36. Okay, let's get a 10 tick stop on it. This window on top. And just go to 37 to bump my stop to break even. The NQ is actually giving a short right here almost. Needs a down close. Right, there it is, break even on the ES. I'm just going to lock in 1 tick on the ES. The NQ, well, the NQ is not giving a short after all. We'll go to plus 4 on the ES. That's $500 right there. That's $1,000 right there. And it should make it up here to the prior swing high, which is pretty much already done. I'm just going to lock in that 10 ticks. That's $1,250 because it got right up to the prior swing high. The Russell had the same trade right here. I think that commodity oversold. It didn't. I'm sorry, I did not have a trade there. It did not commodity oversold. Over here on the NQ, you don't have a thing. That's it. That's all that we have. Okay. So I picked up 10 ticks. 10 ticks right there on the ES trade. And now we just have to wait a little bit. Just a little bit longer. Okay. And let's just see here. Okay. That's good. There, nothing there, nothing there. All right. So over here now, we need to get into the oversold and then commodity oversold off the midpoint on the gold. All right, the Russell just had the same trade the ES did right there. And the NQ was out of position to give us the trade. It started from way down here instead of at the midpoint on retracement. Okay, Randy, are you in here today? You're in here right now. Cliff, not in here. Okay. So we need to hit the midpoint here. And then bounce up off it. Okay, we're at the midpoint on the gold, but we need a down close followed by an up close on the gold. Now this morning I went into like a 20-minute discussion about seeing what to expect, knowing what to, kind of looking ahead a few bars to see what needs to happen to give you a trade. You can count the number of bars because these are range bars. You can count the number of bars and what needs to happen for you to have a trade. And if any of those don't happen, then it ends up being no trade. This one right here, I was hoping for a down close so we'd really bounce off the midpoint. You know, in hindsight, it looks like it hit the midpoint right there, but I get rid of the midpoint actually. The midpoint is here at 81.75, and the low of this bar is 82, so it didn't actually hit the midpoint. That's kind of what I was getting at. All right, we need a down close over here on the gold. Down close, put it down to the oversold. And we need a down close on this and a down close on the next bar. This is what I was doing this morning. All right, down close on this will get us here. Then the one after that could hit. We got to have a down close on the one after that too. So you got to have a down close on this and then an up close. We're going to have a down close on this and the next bar and then an up close. And over here we need a down close on this and then an up close off the midpoint. So I was trying to explain to you guys this morning, because you know how big every bar is going to be. You know where the bar is going to close. So you know what the next bar has to do to give you a trade. If you get the down close here, this will be in the oversold. Then we just need an up close off the midpoint. If you get the down close here, it's going to be in the oversold, but I don't know if it's going to actually be touching the midpoint. If you get a down close here, it will be touching the midpoint. So then we just need an up close. Over here on the gold, if it goes any lower, it's not going to be a trade because the up close would be below the midpoint. You guys see that? So you can see a couple bars ahead whether it's going to be a trade or not. See, we've hit the midpoint right now, and we just need an up close on the Russell. That's the closest thing we have to a trade, 26 up to 27 on the Russell. Closest thing we have to a trade right now. Okay, the gold is pretty close, but the gold is not going to be a trade. So you can see that ahead of time right now because the low of this is at 0.8. The midpoint is at 0.9. So you're not going to make it to 0.9 on the close. Right? And the Russell needs the up close right here. If you get the up close on the Russell, then there it is. That's a trade on the Russell right there. Bing, here it is. You need a down close followed by an up close here, a down close followed by an up close there. Okay, so 27, let's go get to 27.5. It's gonna go one more tick. There it is, stop to break even. So I'll lock in one tick on this. I'll lock in 5 ticks. All right, that's 5 ticks. That's $250 right there. So we had $1,250 over here and $250 there. So far, we're at $1,500 on this session with 10 contracts, or $150 with 1 contract. Either way, it's free to you. Right? This right here, we just got into the oversold. We need an up close. Now it's not going to be high enough. Remember I told you that a second ago. The up close is going to be right here at 0.8. It's actually going to be at 0.7. That's either way, it's not going to be high enough. So there's going to be no trade over there on the gold. Neither one of these gave the down close that we needed on the ES and the NQ. So we don't have a trade on either one of those. So the only trade we had was this one right here on the Russell. Does everybody follow that? Have any questions about it? Oops. All right, so we have about 3.5 minutes left here. Now the Russell didn't end up giving us the up close, so we don't have a trade there. All of these started to run without pulling back deep enough. Well, the Russell, we did take a little bit of profit on the Russell, but these two started to run without pulling back deep enough to give us a trade. Okay, now if you look at this right here, you see how it closed above the flat spot, but it wasn't flat on the bar before. It's going to be flat on the bar before it, as well as one that it closed on. Whoops. Ah, crap. Sorry about that. I said the way it's coming together, it doesn't look like we're going to get another trade here. And when that QQQ short popped up over there, what I was saying was on a larger time frame, that means that the trigger just went into the overbought, suggesting that we're going to get a pullback soon on a smaller time frame. But the way it came together, everything is in the green right now. Even the gold is in the green. So you're not looking for a short on the gold. And everything else needs a deep pullback right here. I don't think we're going to get it anywhere. So in this session, we ended up with plus 10 ticks on the ES and plus 5 ticks on the Russell. It worked out to be $1,500 altogether with 10 contracts, or 150 with one. Which is all pretty good for free, especially since I was able to tell you ahead of time what was happening. You put the background colors on all charts. It's inside the context bar, inside the TIQ context. Right here, just check this box. Show price YBR location. Okay, if you don't have that box, then you need to remove the context and put a new one on there. or, no, I'm just going to say that. That's all you need to do. Remove the context and add another one. And then you need to refresh your chart. Click the refresh button. Remove the context and add another one. But if you don't have that in your context, if you don't have that right there in your context, I thought that was there the last time that we met last week. But there should be a little purple circle on your context. If you need to refresh your context, there's a little purple circle. You can click on that and update it. Okay, Bart. All right. Well, I've worn out my welcome. I run over a little bit. Anyway, if you guys haven't taken a free trial, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button, bring it to this registration box down here at the bottom, fill it out. All right, gives you TradeView login ID. The rest of it, name, email, phone number, all that stuff. Hit register. When you do that, we'll know you registered, and we'll get you all set up to be in the room in the morning and to have your indicators indicating on your charts. Okay. Did you find it, Mark?
You may have to remote in.
Oops. Yeah, that could be the case. But just do this part. Click on that and do show price YBR location. Okay. All right, we almost have a trade set up here, but I'm going to pass it back out. I've run over a little bit. I'm going to pass it back out to fabulous Phoenix, Arizona, and Studio A, overlooking South Mountain, America's largest city park. Wait, if you are ready. You are.
Yep.
As usual.
Okay, recap of the morning session.
Today took 5 minutes and 3 trades to get to $1,500 with 10 contracts on.
Good job.
Thank you very much.
All right, guys, we covered it all. We'll take one last look at the daily chart. And we're up off the BBC. We got red and falling overhead. We're sitting really right on top of that 62% fib extension. We got a wick to the downside, so we touched the BBC. So how we close today, as always, will be important. Don't know how much movement we'll get this afternoon. If we just kind of stay where we are and consolidate sideways, then red and falling is going to drop. So we've already covered how to become a member. Covered all the markets in granular detail. If you missed the beginning of the broadcast, youtube.com/CFRN. We record and archive each and every daily broadcast there. Currently, there's over 2,800 daily episodes. youtube.com/CFRN. And today's broadcast will be available about 30 minutes to an hour after I sign off. Our good word for today: wisdom for parenting teenagers. Now, I know that in our demographic, a lot of you have grandchildren and even great-grandchildren. And some of you have teenagers. Ecclesiastes 3:1. To everything there is a season, a time for every purpose under heaven. Question: why does a happy, cooperative 12-year-old suddenly turn into a sullen, depressed 13-year-old? There are two powerful forces that account for some of the adolescent behavior that drives you crazy as a parent, a grandparent, or great-grandparent. The first is linked to social pressures common at that age. But there's a second source of disruption. It's related to hormonal changes that not only transform the physical body, but also revolutionize how kids think. Absolutely no sense to the adults who are watching anxiously on the sidelines. This hormonal firestorm can destabilize their self-concept and create a sense of foreboding. Parents often despair during the irrationality of this period. Everything they've tried to teach their children seems to have misfired for a couple of years. Self-discipline, cleanliness, respect for authority, and even common courtesy may give way to risk-taking and all-around goofiness. Now, this was true 100 years ago, and it's true today 100 times 10 because of social media. Think about when you were a kid. What was it that you were doing that your parents thought was just foolishness? Maybe it was long hair. Maybe it was bell bottoms. Guess it depends on the generation you grew up in. But this same situation has presented itself generation after generation after generation. But this is a generation on steroids, again, because of all the screens, from the iWatch to the iPhone to the iMac to the PC to the TV. It's hard to get their attention because they're so busy trying to get their peers' attention through a clever post, a naughty pic, you name it. It's tough. It's not an easy job. Never has been, and it's gotten tougher thanks to technology. If that's where your child is today, or your grandchild, there's good news. Better days are coming. Your unpredictable teen can actually become a tower of strength and good judgment if they don't do something destructive before their hormones settle down once more. What should you do as a parent? First, don't let them cut off any body parts, okay? And you don't draw long-term conclusions based on a short-term season. Second, let them know you love them. Be patient and pray for peace of mind. Philippians 4:7. And the peace of God, which surpasses all understanding, will guard your hearts and minds through Christ Jesus. Just keep pointing them to Jesus. They may not want to hear it, but if you can actually get them involved with some kind of a youth group, a church, maybe a church camp. Church camps today are so different than they were when I was a kid and went to church camp during the summer. It's really a radical, explosive experience. The music has changed. The style of teaching has changed. The word itself has not changed. But how it's presented and how kids relate to it, it's pretty incredible. Millions of Catholic teens just went to Rome for an event they have there every summer. So, you've been sowing good seed into your children as they've grown up. When I went through my wild child years, which lasted about 20 years, my grandmother never gave up on me. She just continued to pray for me. And then at 37, everything she had prayed for, everything she had fasted for, every positive confession she had spoken over my life, it all came together. So don't give up. Just keep pointing them to Jesus. And look for ways for them to engage with other Christian teenagers. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.